financial management when you're small is really easy. It's really straightforward. But when you start to grow your business and you start to scale, it gets very complicated very, very quickly. As you grow in teams and you grow in your business, there's a lot more operational things that happen in the background, and we have to really understand the financials, behind that. And for me, it was a case of how do we do it better? How do we find people that can support this? And in the UK, there are some, pretty decent accountants. However, our experience so far has been that these guys actually, know what they're talking about. So they're going to share some experience today. They work with dental practices all over the UK. They work for accountants in the UK who outsource to them, and also do a lot of work with big practices in the USA as well, and big groups. So we're very fortunate to have a massive wealth of experience here today with us. So thank you, Vipin.
Thank you.
You take over.
Yeah. Thank you, Bobby, for the quick introduction. So good afternoon, everyone. So my name is Vipin, as Bobby just mentioned. So let me start with a quick question, How many have you went into dentistry because you were passionate about cash flow? You were passionate about the financial reports, you were passionate about the tax strategy. Because now in the next phase of life, you'll be entering into that phase, where you'll be setting up your own practice. You'll be stressing about the financial pressures. You will be thinking about the overhead, because so far you may be just looking at your pay schedules, mid of the month, and just looking at your metrics and etc. But now you have more variables to look at in the actual scenario. So because if you don't have the right financial systems in the early stage of your business, it's going to cost you very high at the later stage, because again, any financial mistake is very expensive. It's not cheap. So today I'm going to talk about how to build a strong financial management system, where these are the topics we're going to cover. First, we'll start with the basic financial terms to remember, because I understand none of you are accountants, so you should know the simple financial terms which you should always look at whenever you're looking at your financial statements. Why UK dental practices fail to scale, what financial systems really mean. Very important, what is budgeting, what is forecasting, because most of the people, they get confused between the two, because they feel that forecasting and budgeting are interchangeably used. How much money do you need? We'll do an Excel spreadsheet also, in which we'll plug in the numbers and see how much money do you need. We will also run the sample financial statements, the basic financial statements, how to read a financial statements, and how to build a strong financial management system. We'll also learn about the various valuation methods, and because every money that you save in your business has a corresponding effect on your enterprise value. Because at the end of the day, as and when you expand your practice, because you may have a vision that after a decade you want to exit. So it's very important that you do your homework from now. We will also have a quick overview of our two products, which is AcoSpark Pay and AcoSpark CFO, which I'm going to cover up in the upcoming slide. And also I'm going to talk about who we are. So although Bobby has already touched upon. Starting with, what are the basic financial terms to remember? The first basic financial terms is what is going to be your business structure. Whether you will continue to operate as a sole trader or sole proprietor, or you will set up a limited company. So it's very important, looking from the tax perspective, how you want to structure your business. Because for example, if you continue to operate as a sole trader, so whatever money your business is going to earn, that will go into your personal tax return. And if you're in the higher tax bracket, that has a corresponding effect. So you have higher tax liability. However, if you incorporate yourself as a limited company, then your company first pays the tax, which is called corporation tax. And any money that you take out from the business in the form of a salary or in the form of a dividend is only the money which gets reflected in your personal tax return. So it's very important that you have a right financial systems in place to determine what is going to be a business structure from the day one. Second, revenue mix. So I understand, let's say for example, you want to set up on your private practice. So it's going to be like, what would be your different revenue streams you will have? You will have, capitation schemes as well. You will have product sales as well. You will have hygienist income. You will have associates income. And let's say you have NHS contract as well. So you have NHS income as well. So it's very important that you monitor your revenue mix from the day one and look at which are the areas is going to give you the maximum revenue. Next is the fixed and variable cost, because all the costs are never fixed, not all the costs are variable. So that you have to understand the distinction between the fixed and the variable cost. As the name suggests, fixed cost simply means, the cost remains the fixed. For example, let's say you have taken a place for the practice and the rent that you're paying is your fixed cost. Similarly, you have employed staff, it's your fixed cost, unless until, let's say, their appraisal happens next year. So you always have to be mindful, and whenever you're estimating your running capital or a working capital or an OPEX, you always have to consider what is your fixed cost and what is your variable cost. And as the name suggests, variable cost means which vary according to the revenue. Similarly, if you look at it from your own point, so as and when you earn more, you get paid more. So this is called variable cost, which is totally dependent upon the revenue you generate. Next is gross and net profit. So gross profit means revenue minus the direct cost. That direct cost means any expenditure which is directly attributable to the generation of that revenue activity. However, net profit means gross profit minus all the other expenditure which is not directly attributable, which is indirectly attributable. It could be your rental, it could be your marketing expenditure, it could be your employed staff, etc. Next, we're going to talk about a very, very important term which everyone knows about it, which is called EBITDA. The full form is earning before interest, tax, depreciation, and amortization. The difference between the net profit and EBITDA is simply, so EBITDA actually gives you the real picture of the organization in terms of how much is the cash profit actually they have generated as compared to the accounts profit or book profit. Next is debt and equity. Debt is simply means the money that you have borrowed, and the equities means the money that you have actually put into your own business. So there has to be a very good balance between both the terms, which is debt and equity. In our accounting language, we always say debt should be 2 times of equity. That is 2:1. Next term is capex and opex. So for example, even if you go to the bank and apply for a loan, so the bank is always interested to know what would be your future capex and what would be your future opex. If you raise the money, where are you going to spend that money, right? So capex means any capital expenditure that if you are spending money on your building the practice, you are spending the money on buying the equipments. So those are typically known as capex. And OPEX means running expenditure, which I mentioned just now, all the indirect expenditures. Break-even point, no one gets profitable in the year 1. It does take time. I think Ashley did mention, yesterday that it takes time to get normalized profit. So it's very important that you should determine when is going to be a break-even point, which is no profit, no loss. At least you are able to survive. Next is the margin of safety. As the name symbolizes margin of safety, that means how far you are safe from the break-even point. So let's say your income is £100,000 and your break-even point is £80,000. So the £20,000 over and above the break-even point that you're earning is your margin of safety. That means even if you drop your income by another £20,000, you are still at a no profit and no loss situation. Next is the financial due diligence. So financial due diligence is typically an activity where we try to look at the financial statements in detail, look at the real value of your financial statement or financial business. Deferred consideration. Deferred consideration means, for example, if you're thinking to buy the practice, you may not be paying all the money upfront. You may be, let's say you have bought a practice for £500,000, maybe £300,000 is something you're paying now, and the £200,000 you'll be paying deferred. That means that's a consideration you're not making now because it will be dependent upon some targets in terms of the revenue that you make or the UDA that is being achieved, etc. And the last is asset finance. The money that you borrow to purchase an asset is simply means an asset finance. And for example, you want to buy dental chair, you want to do the interiors in-house, etc. So any money that you buy to construct those, that becomes your asset finance. Why UK dental practices, fail? So many practices, many clinics don't fail, because just the industry is bad. They fail because they don't have the right financial systems in place. And financial systems actually gives you clarity. Financial systems gives you control. And financial systems gives you confidence to run the business. They actually helps you to sleep better. So that's why I mentioned, it's very important to build the financial system from the day one, especially when your target is not just to survive, but also to build. So if you don't have the financial visibility, if you have uncontrolled cost base, this is one of the most important problems that we have identified in many associates who turn into entrepreneur, that they get excited to have a lot of unnecessary costs in terms of the working capital requirement or the excess, they hire new staff, So it's very important that you only hire or you assess, what you need. How much stock you want to keep it in the practice is something you always have to observe. Because anything and over and above what you have taken in practice is actually eating your profits. So it's very important that you should have a control on your cost. You should have cash flow blind spots. That, again, if you don't have the right cash flow systems in place, because the money gets leaked otherwise. So it's very important wherever your money is pending, you should have a full control. Weak financial control. I have seen a lot of practices where the person who is actually ordering is the same person who is approving those invoices and is the same person who is making those payments. So it's very important that you divide the responsibilities to ensure that you have a strong financial controls in your practice. Growth without financial discipline, you should have an internal financial control systems in place and no KPIs or no accountability. I understand that once you get into a practice, entrepreneurship, you are busy and you don't have time. But if you don't review your financial statements, then you're just sailing the boat without any direction. So it's very important you should have strong KPIs in place and you should make yourself accountable for any performance. So what financial systems really mean? So when I talk about the financial systems, I don't mean, complicated spreadsheets, No. Financial systems is never the Excel spreadsheet and the, multiple budgets, etc. I mean good and repeatable habits. So what are those habits? You should have budgeting in place. You should have forecasting in place. So budgeting and forecasting are the two pillars of a successful organization. You should be tracking your cash. You should be controlling your expenses. You should be tracking your revenue also. Because if you don't do it now, because let's say, for example, if your revenue is dropped by 10%, you should be looking at now, not 3 months from now. Because otherwise, you would have already lost that opportunity because you didn't took the right decision or the right corrective action. And also, you should review your numbers regularly. Because systems will remove the guesswork and any emotional decisions that you undertake. So what is both budgeting and forecasting and what is the major difference between the two? I'll start with a quick example. So let's say Sandeep mentioned yesterday, that he wants to build a practice having a turnover of 1 million, right? So budget is something, for example, I put an example here. We budget 1.2 million total income this year with the staff cost capped at 35% and the lab fees at 10%. So you should have a very clear defined budget because the purpose of this setting a budget is actually so that you can plan your cash flows accordingly. How are you going to spend the money? Where are you going to get the money from? You should set the spending limits. And you should ensure that you are profitable as well, not just surviving. So budget again has a different elements and different components, starting with income budget. So in income budget, you would have your different source of income, the revenue mix, such as NHS income or the private income or the capitation income. So you should allocate, for example, if you are planning to have, let's say, 3 years down the line, you have 4 to 5 associates working with you. So you set up the targets, have the budget in place so that you have a clear direction as to where you want to be. Similarly, you should have a cost budget in terms of the associate cost, in terms of the staff wages, lab fees, any materials that you consume. And not just that, we also recommend most of the dental practices we work with, any platform that you use, for example, if you're using HeadReacher, Dental Directory, Right Quarter, whichever platform you're using to buy any material, you should set spending limits. Because a lot of time it happens, when When the practice manager places an order on your behalf and you're busy, so they exceed the limits because for them, everything is urgent. So it's very important that you should think from that perspective. It's not just accessing the portal and placing an order. There's going to be an equivalent amount of money that's going to hit your bank account. And similarly, you should have a cost budget for equipment leasing and any repairs, because repairs are ad hoc. You can't have visibility, but at least you should have regular insurances in place. Similarly, what is forecast? So forecast means based on the current UDA delivery or private bookings, now we are forecasting 1.1 million income, not 1.2 million income. So forecast is a regular activity. Maybe you set up your budget at the beginning of the year, but you have to keep revising your forecast depending upon the lot of uncertainty that happens during the year. So here you predict, what your practice will achieve based on your current performance. Let's say you are thinking, or you're considering, or you're anticipating that's going to be an under delivery of the UDAs. Similarly, there's an associated sickness or turnover, or let's say increase in the private uptake. So you should revise your forecast accordingly. Let's say you have received an email from Henry Schein that they're going to increase the pricing of the material. Then you should revise your forecast accordingly. Or there's a regular equipment breakdown or unexpected repairs, then you should revise your forecast accordingly. So just to summarize, budgeting is a plan, forecasting is an estimate. Budgeting is done before you start. Forecasting is during the period. Budgeting, the basis is assumptions and the target that you set. Forecasting depends upon the actual performance and the trends. And the purpose of the budgeting is simply having more control on the budgets, whether it's revenue and the expenses, and the accountability of those budgets. And the forecasting actually gives you insight and what corrective action you need to take. So actually budgeting tries to answer, what do we want to achieve? And forecasting tries to answer what is likely to happen. Yes, Sandeep.
Quick question, sorry. The budget can that change? Forecasting seems like it's a living document which we update depends on what you just said.
Yes.
Is that correct?
So budgeting is actually, there are two types of budgets usually being set up in Indian dental practice, which is static budget and the rolling budget. So it's not something, rolling budget. So let's say, for example, you have set up a budget for the 12 months. And let's say after one quarter, you have analyzed, we are not able to achieve the budgets. But you are very positive about certain months in a year. So you can roll that over. In those particular months, I'm going to increase my budgets. I'm going to increase my targets accordingly. So that at the end of the year, you are at the same position as you had predicted in the beginning of the year.
Got it. It's
Yeah.
the average of those 12 months.
Absolutely. So in this exercise, what we're going to do, a sample example, we're going to calculate how much money do I need. So like I mentioned previously, there are two types of expenditure that you incur, or you have two types of estimate that you need to do, which is CapEx and OpEx. So CapEx, let's say, I think most of you are going to start at the practice. So these are the capital expenditure that you'll be anticipating. First is your clinic build out or the leasehold improvement. Second is the dental equipment. Third is the diagnostics and imaging equipment. All the IT infrastructure, furnitures and reception fit out, and the pre-opening working capital. So it's not something you start with a zero bank account. You need some amount of working capital at the beginning of the year, beginning of the practice when you're starting. OpEx, staff salaries, rent, utilities and maintenance, any consumables that you need, as and when these are consumed or used, marketing expenditure or the patient acquisition, and professional fees and compliance. So what I'm going to show you now, a simple exercise, what we have done here. So you need to plug in the numbers in terms of certain assumptions. So let's say you have estimated my material cost, that should be, there is 7% of my revenue. Similarly, associate fee is going to be 45% after recharging of the lab fees. And lab fees is, let's say, 6 to 10%, you can take the range. And you will also have hygienist, and the hygienist cost is, let's say, 4% of total revenue, but you can have different model in terms of whether it's going to be a full-time hygienist or it's going to be a 35% revenue, etc. Then you can estimate other practice expenses. For example, how much money you would like to keep it aside for the purpose of staff training and welfare. Rates, utilities, repairs, cleaning, service charges, printing stationery, etc., etc. So what will happen? So if I take you to this tab, which is called startup cost. So you need to plug in the numbers here in terms of the premises cost. Let's say you have set aside £100,000 for the build cost, and then all the equipment that you need, let's say, is 30,000. For the decon dream, you need 45,000. For dental equipment, again, you need 30,000, and dental instrument 25,000. So let's say you have plugged in all of these numbers, and the total startup cost comes out to be £280,000. Now the question arises, where's this money going to come from? So let's say you are going to put £100,000 as your personal finance contribution, and £180,000 is something you're going to apply for a loan. So let's say we go to the loan schedule, and assuming that the interest rate is 7%, so we have plotted a complete number in terms of what is going to be a complete loan schedule, and how much is going to be interest payments and how much is going to be your capital repayments. Then we will do the revenue forecast. So on the basis of the opening hours and the closing hours, we will estimate what would be your revenue. And obviously, you will not have the full chair utilization rate. So you can again estimate that in the first few months, I'm going to have only 20%. The next few months, I'm going to have 50%, 60%. And then there are a few months, where in the month of December is a holiday season, then I don't have much of the chair utilization rate. So you can plot it for the 24 months. Similarly, you can estimate all your staff cost in terms of the receptionists, practice managers, full-time hygienists, etc. This is a complete P&L that is being prepared. It's all interlinked. So this actually becomes your forecast. So here what you're trying to do, you have estimated what's going to be your revenue forecast for complete year 1, split into all the 12 months. That's added to year 1, same for year 2, same for year 3. So you have actually forecasted for the complete 3 years. And similarly, you have also prepared a complete P&L, forecasted P&L for all your expenses, net profit and EBITDA. So that becomes your baseline on which you will start incurring those expenditures. Similarly, assuming that all the money is what you earn, is what you receive into your bank accounts, this becomes your cash flow statement. So cash flow statement, simply put, it's a summary of how much money you already have in the bank account, what is coming in and what is going out, and what is your closing balance. So again, like I mentioned, assuming that whatever you earn is what is coming into the bank account, you don't have any debtors, you don't have any patients who owe you the money, then obviously this gives you an opening balance. Let's say you have £10,000 as an opening balance, and startup cost you have £280,000, and this has been financed by a loan or the personal finance contribution. So this is going to be your closing balance, and that becomes an opening balance for the next month. So you can estimate accordingly how my bank balance will move in the year 3, which is £173,000. Anyone has any questions?
Can we have a copy of this?
Yeah, no problem. Yeah, I'll email it to you. Yeah. So here we're trying to read the financial statements, because you would have already seen in a lot of companies, but now this is going to be your own financial statement. So you should know how to read the financial statements of your organization. So the first top line is your revenue. So revenue is what you earn. But remember, again, the money which you have in the bank, because most of the accounting gets confused between the cash and the profit. There's a difference between the two. Because let's just take an example. You had £200,000 in your bank account, and you have spent £60,000 on certain fixed asset expenditure. But you will say, hey, my profit is still high because those are capex, those are not opex. So that is not going to hit your bank account. That is going to hit your balance sheet. So that is not the balance sheet and profit and loss are two different things. So you have to look at it from that angle. So profit and cash, they are two different concepts. But you always have to try to have a match between the two timings. So let's say you have earned something, but you're going to receive it at a later date. For example, whatever money you have earned from NHS, that you will receive in the first of the next month. So it's not something you're going to get on a daily basis like you receive your private income. So accordingly, you should plan your expenditures accordingly. All the associate payment, lab bills payment, all the big payments, you should always defer it until you receive those payments as well. So there has to be a match between the payment timing and the income timing. Yes, Sandeep?
So if it hits the balance sheet, I mean, is that positive or negative? We still have that money, we bought the equipment.
Yeah.
So it's like 160,000 now from 200. And that's going to earn us more money in the future.
Yes.
And still our equipment.
Yes.
We still own it.
Yes.
How, as a business as a whole, what difference will it make if it's hitting the balance sheet?
Okay,
I'm
sure.
trying understanding.
No, understand.
Amortization, spreading it.
You're spreading off the expenses over the period of time. So let's say, for example, I'll give you a simple example, the goodwill. Yes. Have you heard of this term called goodwill?
Yes, yes.
That any over and above the actual real value that you pay to buy the practice is what the goodwill that you pay, right? And the goodwill, like the extra money that you pay is actually being amortized. These are not depreciated. So depreciation simply means you have a wear and tear of the asset. So for example, you buy a car, the value never remains the same. Over the period of time, the value goes down. So that is, but you're not paying that depreciation to anyone. It's a non-cash expenditure. Same way, but amortization, in this case, you are paying over and above the real value. So the money which you pay today, so has to be, the expenditure, the extra money that you're paid is being amortized over the period of, let's say, 20 years. Because you feel that, okay, you want to keep this practice for the next 20 years. So that's the difference between the depreciation and amortization, right? So to answer your question, Sandeep, because like I mentioned here, there are two types of, again, assets. One is a fixed asset, right? And second is a current asset. So let's say you're keeping stocks, right? And you have some cash, you have stock, you have prepaid expenses, any expenses that you have prepaid, like before it is due, you have prepaid to someone. Those are equivalent amount of cash, right? But when you put it into a fixed asset, that is going to give you the benefit over a period of time. So you cannot sell it tomorrow, right? Obviously, you will get at a lesser value. You're not going to have the same benefit. So, but that's why I'm trying to create a link or a match between the OPEX and CAPEX. I can explain more in detail separately. Yeah.
Can you explain again the difference between profit and
Cash.
cash?
Right. Okay. So let's say your financial. This is the financial statements. Okay, and this is showing, and earning before interest and tax is £31,000. But maybe this £31,000 is not in the bank account. This is not what exactly you have received, because there are few patients who are yet to pay you. So the profit which you see in the accounts is not
real time.
Is not real time.
What's in the account.
Absolutely. Similarly, let's say you have paid rent for the complete financial year. Complete year you have paid rent in advance, right? So that doesn't mean you will account that as a rent expenditure in this, and it is, let's say it's overlapping between one year to another year. So obviously you have to split it that way. But you have made the payment for the complete rent now. So, but your cash is gone. But your profit will only have an impact for that particular month, and then 12 months.
So you've really got to keep an eye on
Both profit and cash.
Even on a personal level,
Yeah.
sometimes it's hard to. Sometimes I miss things even on a personal level, and then it's hard to kind of. If you miss the payment that's going out, then your forecasting is wrong.
Absolutely.
Or your actual profit is.
So similarly, let's just take a simple example once again. You are saying you're very busy right now, yeah? You have patients coming in, you're very successful, and you're thinking that you have booked a very good amount of profit this month. But when you go to the system and you look at the bank account, there's not much cash. So you will feel that, the receptionist is not taking the money. The patients are coming in, booking the appointment. There's no upfront payment, and there's no even payment being taken at the later date, and the patients are walking out. So the cash and the profit. So you have still actually earned the money, you have made the profit, but you don't have the cash right now.
Yeah.
So there has to be a match between cash and the profit. So you should reconcile and see that if I've earned £100,000, why am I have only £40,000 is my bank account? Where's the 60,000 gone?
So you've got to reconcile more regularly, or someone in the team.
Yes, yes. So those reconciliations are very important. So this is a draft financial statement. What we have tried to highlight is the revenue figure at the top, then any cost of sales, which is a direct expenditure, which is a net gross profit that you arrive at, and all the expenses. So Sandeep, try to answer your question. This is a kind of balance sheet that I'm talking about. So in the balance sheet, you have cash as your bank balance. Then you have inventory, the stock that you're keeping in the practice. That is also equivalent amount of cash, that you can consider. Then you have fixed assets, all the tangible expenditures, the equipments that you have. Then any liabilities, that the money that you owe, whether to your creditors, the vendors, and also, what you call the tax liability again. You always have to make a provision of your taxes as well. Any long-term debt that you have taken from the bank, that you also have to consider it. Equity is the amount of money that you have put yourself into the business. So that shows your total real value, total equity. So it's very important that you build a strong financial management system, because what we understand, this good accounting is not just an optional. You should use the right software. You should reconcile monthly. You should work with an accountant who has right healthcare knowledge. Don't just wait till the tax season. Financial discipline should be an ongoing activity. It shouldn't be just reactive. So let's say, for example, again, 3 years down the line, you will have 2 practice and maybe have 5 practice. So you should look at a practice level, not just at the group level. So practice level financial clarity is very important. Because sometimes what we have seen also, one of the group we are working with, so they have 24 practices right now. So 3 practices are actually running into losses, and those are actually eating the cash flow of the other practices. So that kind of financial discipline is very much required. You should always have a right cost structure and the payroll control. You should have a cash flow discipline. Whenever you're spending, you should have a purpose as to why you are spending the money on, whether it's a chair, whether you have right patience, Obviously, you buy the asset sometime and then you will have patience at a later date. You should always look at your monthly management reports, because even if you spend 1 hour in a month, that's going to make a huge amount of difference. If you don't have the right management reports in place, then you are again sailing the boat without any direction. You are just moving and keeping yourself busy. And at the end of the day, you will have real financial pressures. When HMRC calculate, or your accountants calculate your tax liability, and then you say, oh, where am I going to get this money from? I have actually personally seen, few dental practice owner where they have grown with acquisition, and then they later realize for the tax liability they have to put in their own personal contribution just to pay it on time, because you cannot defer HMRC. You can defer the expenditure, but you cannot defer the taxes. So it's very important. You should spend your cash wisely. And governance and decision making is very important. But decision making can only happen when you have information with you. So any decision that you take should be data driven. There are 2 methods usually which is being followed in terms of valuing a dental practice. First is a turnover-based valuation, or as an EBITDA multiple approach. But majority of the corporate groups, they prefer to have an EBITDA multiple method. And what multiples are we going to apply is totally dependent upon where your practices are within the UK. So multiple could be from 4 to 7 times of your EBITDA, but more sophisticated preferred corporate buyers. These are the 2 products that I'm going to talk about now, which is AcoSpark Pay and AcoSpark CFO. We have been working with dentistry for about 17 to 18 years, and working with a lot of dental practices. We identified this is a very important need. What happens is, once, let's say, by the end of the month, the practice manager and the principal owners, they try hard to ensure that associates get paid on time. So there's a back-end team who works day and night to ensure that information on the pay schedules are done correctly, because otherwise the associates will have a lot of questions, associates will have a lot of queries, and that also somewhere destroy the reputation of the organization as well if you don't pay on time to your associates. To solve this problem, so what we have done based on the automation, machine learning, and rules, we have brought with the AcoSpark Pay, where it can automatically, not complete automatically, but it can accurately automate the pay slips, the pay schedules of the associate. It can improve the clinician trust and transparency. It's going to significantly save your time and the cost, and it's audit and compliance ready. So what you get is your associates is going to get the pay schedules on time with all the metrics, and that will build more trust and transparency with your associates. The second is the AcoSpark CFO. So again, as a business owner, once you get into the business, you want to analyze the performance of the organization as a whole, not just in one unit. So you should look beyond the financial numbers. So let's say you want to track your P&L, but at the same time you want to track your marketing ROI. This is one of the major area. What we have seen is like people just spend on Google ads. They never track it. What actually is the benefit out of it? Similarly, you have employed staff, but you never looked at the productivity. So what AcoSpark CFO does, it actually connects or talks to the different systems. So let's say you're using KStack, you are using any marketing platform such as Google Analytics or Boxley or whichever platform for Google's for marketing spends. Similarly, let's say you're using Bamboo HR for your HRMS, and similarly, let's say you're using another software also. So you have now purchased 10 to 20 subscription, and then as a business owner, you are treating the patients, but you are totally relying on systems that are doing the work. No, systems are not going to do the work. So it's very important that systems should talk with each other. So what we have done is we have integrated the different systems into one dashboard. So I'm going to show you now both the products. So this is AcoSpark CFO. So what does it do? So as a practice owner, you want to first look at the revenue. So let's say your collected revenue is £478,000. However, the previous month was 679. And what you have achieved out of the target, this barometer is showing 65.4. It is also showing you target versus collected revenue. Let's say you have 3 practices in Edinburgh, Gloucester, and London. Where is this money coming from? What are the different sources? And weekly distribution of income as well. So wherever you have achieved the target, wherever you have earned more than your targets, it is also showing you in green. And it also shows you the yearly trend. So you can also see on month-to-month basis as well. Month-to-month basis as well. Over the last 3 years, how your revenue has moved. Which are the month which has gone up, which are the month which has come down. Similarly, let's say you want to track your UDAs as well. So let's say your annual target is 50,000. You have achieved 19.57 so far. So you have achieved only 38.69. And how it has moved from April to December, and this is the cumulative figure. Similarly, in the morning you want to track your debt. That is how much of the money that your patients owe to you. So you are sitting at a debt of 36.62. And let's say you want to track by location, by a particular month. So you can always look at how much money that your patients owe to you. Similarly, you want to track your number of patients. How many new patients have you received? What is an average appointment duration? How much is the waiting time? Similarly, you want to look at practice plan. Similarly, you want to look at the number of appointments. And you also want to look at the performance of your associates as well. How many leaves they have taken, how many sick leaves they have taken, etc., etc. Now I'm going to talk about the procedures. How many Invisalign, implants, as compared to the targets being done. The treatments that have been performed. And in hygiene 30, hygiene 60s have been performed. Now I'm going to talk about so these are all the KPIs that you as a business owner should look at from time to time. So we have actually set of 50 KPIs, but you should only look at what you want to track, because you can't track the 50 KPIs, because you should look at what you want to take the decisions on. Similarly, let's say you want to track your leads,
Just one question.
Yeah.
Is it fully integrated with, for example, the dental softwares, for example, Dentally and so on,
Yes.
rather than inputting it?
Absolutely. The data is automatically being fetched from these
I would
platforms.
like to answer this question. As long as the base software has an open API,
Yeah.
this can be integrated. In case it has a closed API, then it cannot be. Then also, we can download the data from there and upload this into the system. But that requires some amount of manual.
And Dentally is or isn't?
Yes, this is actually on Dentally data as well.
One quick question from my side. So where does data get stored?
So again, I can take that question. This can be stored either on your servers if you have internal servers. Otherwise, you can take AWS or Azure service here in UK, which is again built to you directly.
Okay, so I thought this is like online platform, is it? Or
Yes, it's an online platform. AWS and Azure is again on. We will host this for you because it's your data. It's the patient data. You cannot host it on our servers.
Is it a bit like Zero where you...
Yes, it will be similarly behaving like Zero, but you will have to pay AWS service separately and Azure service separately. So AWS is Amazon Web Services. Azure is
Can-
your Microsoft, similar to AWS.
sorry, can we host this locally, like on
You can do that. That's
Windows
also
11?
possible. That's also possible. But then, our experience on local servers is that you have to maintain those servers. Your IT guys will have to maintain those servers. So in case you're a large practice, yes, it can be done. But for small practices, we always recommend it should be hosted on AWS or Azure. It becomes very simple and very easy to use.
I think just to, I'm assuming the Azure and AWS server, the data has to be hosted within the UK.
Yes, that's why it would be the AWS UK and Azure UK.
Yeah.
To comply with GDPR and other privacy laws.
Yeah.
Just to continue from here, so you can track your expenditures, the marketing expenditures, among the different campaigns that you're running. For example, let's say you're running a campaign of dental implant at just some amount, etc. And you want to track your SEOs as well, which keyword is running which month, and where you're standing on different keywords, so that you can track more, you can have more patients. And if you want to also track your IVR calls, for example, when we were talking about yesterday as well, where you want to track, how many calls you have received in a particular day, how many were responded, how many calls were unanswered, etc. Bobby, I'll just take 2 minutes. We have also come up with a CFO AI assistant. So, for example, you want to ask any questions from your dashboard, you can also do that. So let's say I want to see what was my total practice revenue. You just press the send button, it'll give you the answer. Sorry, it is taking some time because of internet. So you don't have to imagine, otherwise you have to look at different figures. So everything is being there. So it becomes your own ChatGPT. You can ask any questions, as long as the data is there in the CFO dashboard. Now I'm going to talk about the other product, which is called AcoSpark Pay. I'm going to play a small video, Bobby, just 2 minutes, so that it will help you to understand what I'm going to talk about.
The UK dental market is consolidating. Dental groups are scaling faster than ever through acquisitions, expansion, and operational complexity. Yet associate pay remains one of the least standardized and most manual processes in the organization. Multiple data sources, inconsistent pay structures, manual reconciliations. These challenges don't just slow teams down. They create risk, reduce visibility, and limit scalability. AcoSpark Pay is an enterprise-grade associate pay platform built for modern dental groups and DSOs. It delivers automation, control, and consistency without compromising flexibility. AcoSpark Pay automatically consolidates data across your ecosystem, from NHS contracts and practice management systems to insurance plans, lab invoices, and HR platforms. All data is captured, validated, and structured, eliminating manual intervention. At the core of the platform is a powerful rules engine. It applies your associate pay logic accurately across practices, performers, and contract types, no matter how complex. The outputs are precise and audit-ready. Associates receive branded remittance statements and access a secure online portal for full transparency. Finance teams gain reporting dashboards, detailed journals compatible with leading accounting systems, and bank-ready payment files. Everything connected, everything compliant. With AcoSpark Pay, associate pay becomes a controlled, scalable process, not an operational burden. Reduced risk, improved governance, clear visibility. A foundation built for scale. AcoSpark Pay, enterprise automation for associate pay. Built for the future of dental groups.
So this is the model that I'm going to quickly show you so that you can refer to. So what needs to be done? You just need to log in. Just enter the username and the password. So it asks you, you have two options. Either you can connect with the practice management system, or you can also upload it manually. Sorry, it is taking some time. Or I can show you, if anyone wants to see, I can show you. Oh, it's there, yeah. So let's say the name of the practice, Smile Dental. You can connect with the different sources, like I mentioned to you, or you can upload the files. So let's say, for example, you upload the file, you go here, you have different clinical master data, NHS income, private income, expenses, deduction, adjustments, practice plan, etc. So you just need to upload everything. And 1 minute. Then you come here, generate your pay schedules of your associates. You click here, select your practice, and it's been done. So what will happen? So let's say we are looking at Oxford, or let's say London, yeah. 2025. You are processing for the month of November. You click here. That will show you the list of the associates you have, and then you just generate the PDF, and that PDF goes to your associates so that they can look at, how their pay schedule will look like. And not just that, you can also look at their metrics in terms of the UDAs they have performed, the revenue they have generated, the appointment book they had each month. So let's say, for example, if we look at anyone, sorry. So let's say, for example, if I try to generate this. It's done. So here's your pay schedule, which shows how many UDAs, private income, practice plan, expenditures, and you have all the performance reviews as well. It's that easy. Yeah. The last slide. Who we are. So we are actually the financial advisors to the dental practice, where we help them with the complete monthly accounting, monthly bookkeeping, preparation of the associate pay schedules, periodic management reports, financial performance overviews, finance inbox management, and also supplier payments. And we also assist with the finalization of year-end accounts. So it's been 17 years we are operating in the dentistry. We are serving more than 200 plus client practices at the moment. We are a team of 350 plus people, and we have 13 global offices. And every year we do 9,000 plus associate pay schedules, and we produce 3,000 plus management accounts. Thank you.